afternoon all. How are we all doing? Afternoon, Danny, Mumo, Michael, Paul, Fletch, FTNet. How are we doing? At the moment, Danny is in number 2 spot. Michael is in number 1 spot. Paul is in number 3 spot. Afternoon, FTNet. Michael, number 1. Yeah, here we go. It's good. The race is on. For those of you who don't know what I'm talking about, we've now got this little thing here, first, second, and third. So you're all competing for the top spot. Here we go. How interesting. I don't even know how it got there, but it's something that's arrived. So anyway, afternoon, Ro. Michael needs to keep chatting. Yep. So hello, Robert. Everyone's just going to continuously say something now, aren't they, to try and get that number 1 spot. There are no prizes for number 1 at the moment. I might come up with something. You never know. But I'm interested to see what happens if somebody tips, because I'm assuming they'll just go straight to the number 1 spot. I don't know. I don't know how it works. I don't even know how it got there, but it's fun. Right. This afternoon, we're going to look at the, obviously, indices, see how we're going. The news today, we've had the CAD GDP came out on forecast, and PCE also came out on forecast. So there is a little bit of movement off of it, as you can see, but nothing dramatic. So this is the movement that we've had straight up and then straight back down again. So it's kind of undone itself. So there wasn't really news, which you'd expect because it was obviously a forecast news event. So not sure we'll get a lot of movement off of it this afternoon, but there's certainly a lot of strength coming into the dollar at the open. Say a lot of strength. There's some strength coming in. That might actually be the pound dropping as well. Yeah, Canadian is fairly strong off the back of those numbers as well. So there's a bit of movement going on. We've only got 2 ADRs at the moment. Aussie dollar CAD, that's hit ADR. So you've got potential reversal opportunity coming up on Aussie CAD. That's also in a propulsion gap. Right, okay, so this is that. So we've broken down now below those lows of the week into this propulsion move. So we're back in the previous area of balance that we broke out of and stayed in. Tried to upside, rejected, back down. So really today, if we got a strong move on it, 175 ADR should be the downside on it. So potential drop down M5, wait for some kind of reversal alert or 3-bar reversal or some kind of reversal signal to come in at the lows at ADR. Might get a good bounce off the bottom there. Also, Aussie dollar yen. So that's already spiked out. Missed that one. So there we go. So there's a bit of movement there. ADR dashboard, RSI dashboard is Aussie yen. That's the only thing that's extended. Everything else is quiet. So, and that's just come out of extension on that hammer down basically into weekly low. So again, potential pushback up into propulsion. Aussie dollar yen, good looking opportunity for a long. Kind of sitting middle ground-ish to the downside. So, yeah, good looking move up to there, basically. This morning, we've gone long on the... No, sorry, we've gone short on the S&P and the NASDAQ. So this morning, lovely morning. Which account is this? This is my FTMO account. Right, so this is the FTMO account. Target's 3.5 grand. Already done 3 this morning. Not this morning, this week. So 3 days, £3,000, $3,000 days straight away. So yeah, if we can get that up to 500, that'd be lovely. But we'll see what happens. So basically this morning, really nice day again this morning. So the DAX broke to the upside. This month has been phenomenal. 10 grand straight in this month. Lovely. Really clean breaks, and the days that we haven't had clean breaks, we've had breaks happening straight after. So really easy loss recovery with the EA this month. But there's your DAX break long this morning. I took a partial there. It did go a little bit further and then sort of came back down again. So trailing stop took me out in the second portion. On the FTSE, very much the same story. Broke out to the upside. We had a downside stop out on the FTSE, so it came down at the open, bit messy at the open. Came straight back up. Next candle stopped it straight out. Then broke long. So I took a partial in propulsion. It moved back out of propulsion straight into the upside propulsion gap, which bounced and took it up higher. So I took the full amount off up here. Rather than letting the trailer take it. The trailer was locked in at break even, but I just decided I wanted it in the bank today. I just wanted to end the month ideally on a positive. But we'll have to wait and see what the US markets say about that. So there's your S&P broken to the downside. The 5-minute ORB is in perfect range, so we're broken short. NASDAQ, same thing, 5-minute ORB short. Dow Jones, we are inside bar on the 5-minute range at the moment. So we'll see where we go with the US indices this afternoon. I'm just going to look at targets on these because I want to be quite conservative this afternoon. I don't want to go for any high-risk trades. Yeah, so I'm going to put my partial up in case we double bottom there. NASDAQ, I'll do the same. So just moving the partial up, probably 1.5 hour-ish, something like that. Obviously, we're assuming it's going to break. It might not break short. But so there's targets on those two. Dow Jones, obviously, we haven't gone anywhere yet, but I will adjust the targets. I'll leave that one in place. So looking for a retest of propulsion and yesterday's low. I've got SRP turned on this. I don't think I have I? Support resistance on. I'm just going to put support resistance on, but I'm going to monthly. I'm going to turn the weeklies and the monthlies off and just leave the dailies in place. Just so we can see the daily high lows. These blue dotted lines are the previous day's highs and lows. So I'll just leave that in place. I mean, the partials on that is fine. So we'll see where we go. We haven't broken really very cleanly yet, so we'll see what happens on those. Oh, look at everybody talking now because they want to get the number one spot. It's good, isn't it? I like this. Markets opening week. Holy. Week holy. Afternoon, Ryan. What risk am I using on FTMO? 0.5%. So 0.5%. Can't be too, I mean, trouble with obviously prop is you've got on this FTMO account, it's a 3.5K daily loss. So if you were to go in with 1% long, which would be 700 on this account because it's a $7,000 account, a $70,000 account, and you stop out on that, and then you go short and you stop out on that, that's 4% down. Yeah, sorry, that's 2% down, which is you've only got I think it's 2.5%, haven't you? 3.5K. No, you got 5%, haven't you? Yeah. So basically, if you use 1% risk, the problem is, let's say, for example, you're trading the FTSE and the DAX. If you get a long break, stop out, and a short break, stop out, we open up whipsawed on both of those, you immediately got 4%. Then you only need one more trade to stop out, and that's it. The account is gone. So you can't be too aggressive with it. You can, obviously, if you get a clean break 2 days in a row, you've passed. Yeah, the ORB is fantastic for passing prop. Like this morning, that move there on both indices would generate you 4%. Target's 10%. Do that 2 days in a row. So all you need is a clean break 2 days in a row. Job done. Very easy. But obviously that's high risk. On accumulation days, if you get 2 accumulation days in a row, count's gone. But that's prop, isn't it? It's gambling. It's all gambling because they set limits to make sure that you can't succeed long term. That's the point. If you did succeed long term, they would not make any money, would they? As we went through Wednesday, we went through the statistics for prop and how many people actually pass and how many people get paid. 12 people out of 1,000. Not a lot, is it? What's my opinion on harmonics? They're harmonious. Same as anything, isn't it? It's a way to press a button. Harmonics, I've been through this story before, but I left my mentor to go off and study Elliott Wave. And he said, you're wasting your time. You're going to go off and you're going to come back and you're going to see exactly what I've been showing you for the last 6 months. And you're going to understand that it's all basically based on up and down and risk and reward. And it doesn't matter how you get in. So all Elliott Wave and harmonics are ways to identify price action. Yeah. So butterfly patterns, crabs, all the harmonic patterns were basically made up of A, B, C, D, E, whatever you want it to be. But if you think about it, what is it? Market structure. A, B, C, D, E, F, G, H, I. You can go through the whole alphabet if you want. The market does that. Head and shoulders is a harmonic pattern. A butterfly, a crab, a Gartley. It's all the same stuff. When you see a pattern that goes like that, that, and that, and your harmonic strategy tells you to do that, you are basically employing a 50% opportunity for your trade to be correct. If I wait for RSI to get extended to the upside and I press the down button, I have a 50% probability of the market proving me correct. This is a hell of a lot easier to do than following a pattern that has to go that distance, pull back by that distance, then have to do a mathematical equation to do this, that, the other, and find that level should be there. When it gets there, it goes above it quite, and you don't go, oh, I won't take that because it's a little bit too high. It's far too complicated. When it's pushed up, sell it. When it's pulled down, buy it. All a harmonic pattern is going to do is show you that it's pushed up and pulled back, and now you buy it. Harmonics are a level beyond Elliott Wave, which is a level beyond Fibonacci, which is all you need. Yeah, price pushes down, then it pushes up. When the markets have sold, they take profit. It's all the same stuff. So I went back to my mentor after going off and doing Elliott Wave for 3 months, I would say, and said, you're right. It's just taught me that the market goes up and down. You're still 0.15 range with 3 ADR at the moment, yeah. I may change that. I don't know if I do want to change it at the minute because it's still really volatile. And I'm of the opinion always, when something's working, don't change it. Yeah, I've been using ADR 3 with a 15% ADR range for the last month. I'm not going to change it. It's the right settings at the moment for this market condition. When it starts not working, I'll probably maybe look to go back to ADR 10 and I might switch back to the 20% ADR range. But right now, there's no case for me to change that, is there? Volatility came in there. So news-wise, we've had the news today. There wasn't a massive move, as you can see, on the indices. So all the indices basically did around the 130 news was that, which was nothing basically. So we've moved probably quarter of an ADR, not even that. 27 quarter of an ADR is one. Yeah, so we moved half an ADR, quarter of an ADR sort of movement. So there's no real movement today. It's Friday afternoon. I'll give the market roughly an hour to do something. If it hasn't done anything within an hour and it's stopping me out, then I'll just call it a day. Be nice to end on a positive, but Fridays are typically a bit choppy, aren't they? So, but one thing I would say about harmonics is if it clicks with you, do it. Yeah. So, I learned an awful lot before I started looking into Elliott Wave and harmonic patterns. So I had a really good understanding of market structure, of bank and institutional movement, how the banks and institutions execute their orders. I had a deep understanding of what goes on behind the scenes. So when I looked into Elliott Wave, it made total sense, but it didn't add anything for me that was, right, this is the strategy for me, because I'd come from a strategy that was working and I was above break even. So there was absolutely no point in me going into Elliott Wave because I couldn't make it any more profitable than what I was doing. But if you move from my stuff over to Elliott Wave and suddenly go, oh, I just get what that indicator is doing now, do it. Yeah, everybody's different. Everybody's got a different way of making money. Pound CAD ADR, Canadian dollars on the rampage. So we got Euro CAD and Pound CAD. ADR to the downside. So that's taking me into profit on the Pound CAD. Or the Euro CAD, rather. Pound CAD. There's your ADR hit to the downside, which is coming into previous support. So 125 ADR today, you're going to hit the weekly low and the last propulsion gap that caused the last high, which has been retested twice. So there's going to be buyers sitting there. However, if we break out below this weekly low, there's a chance that the sellers might start to take control and try and push it further. So we'll see what happens with this Canadian dollar. Obviously, this is to do with the expected GDP number, not retail. I think I've said retail earlier, but it's GDP. So it's exactly what we thought it was going to be, which is bullish. So strong Canadian dollar move coming in. US dollar CAD, not strong. So basically the US dollar and the Canadian dollar are both rallying at the moment, which is why this is stalling out. So we'll see what happens. CAD might power up this afternoon. We'll see. Bit wicky today. Long on the Dow. So got a hedge on here. So short S&P, short NASDAQ, long Dow. So unusual for them to go in opposite directions. So one of these is going to stop out. Oh, see that come in. Massive sell order just came in across the board there on all sectors. Big sell order. Checking financial juice, see if there's anything comes in. The other thing we had today, Trump woke up early. So we had the OPEC oil hike, which has brought the oil price absolutely crashing down today. I say absolutely crashing down. It's come down. So yeah, big strong drop on oil there. Whether it'll get anywhere, I don't know. But we were talking about targeting $50 a barrel on oil. An output hike obviously is going to devalue the oil price because the more supply there is, the cheaper the price is. So as long as demand doesn't change, hiking barrel output is going to drop the price. So we may get down to that $50 a barrel. You never know. But there's the start of a move there. Whether it holds or not, we'll have to wait and see. This is the one I was going to talk about. Trump. So basically he came out and said China has violated its agreements with the US. So this is him throwing his toys out the pram because the lawmakers came out and said you can't do what you're doing. So now he's getting cross with China because also China have not come to the table and bent over and said, yep, no problem, Mr. Trump, we'll kiss your feet and do everything you want. They've come out and said, nah, not interested. So he's getting cross. Perhaps not surprisingly to some, has totally violated its agreement with the US on tariffs. It hasn't violated anything. You have illegally placed tariffs on the Chinese country, which your internal people have also said you're not allowed to do. So what makes you think that is something that they should accept? If I said to you right now, I need you to pay me $1,000 a day to watch my stream, you would all run away. And that's basically what he's done. He's told China, you've got to pay 135% more for everything that we do. They've turned around and gone, don't fancy that, thank you. And that makes him cross. So that obviously moved the dollar and the indices down because, again, he's making America great by moving everything in the opposite direction. So we'll see what happens off the back of that. But I suspect he's going to want to put a little bit more pressure on, which means that we could have another drop. We talked about this morning in the live room, this pivotal point we're at the moment with the S&P, where we are up at this potential double top second leg turning point. Yeah. So if we're going to go into a bear market and replicate what we did after the COVID rally, which is the last bear market we had. Yeah. Leg one. Pull back. Leg two. Yeah. Of usually 3 to 5 legs. So where we are right now, we talked about this morning. If you press the sell button right now, stick a stop loss up there, which is 100% of whatever you've put into your brokerage account. Let's say you put 5 grand in an account, hit the short button, calculate the stop loss to be a margin call there so that it just gets you out of the account. Short it, don't look at it for 6 months. There's a high probability that will turn into 50K or more, because if we are going into a bear market and this is the current volatility that we're going to expect, we're going to invalidate that low when we put in the second leg, which means we're going to come back and either test here or here. Yeah. So you've at least got a toe out the water below that leg to come, if not a real cascade. Yeah. So the last time we had a drop of this magnitude was COVID. This is bigger than COVID. Yeah. Biggest world event we've ever had in trade for 60 years, ripping up the rule book. Then we had an artificial inflation because businesses' stock prices were going up while they were closed, which meant we needed to enter a bear market. There's no need for this rally because we know exactly why this has happened and we were in full control of it, unlike that. So this is potentially leg 2 about to start on a big, big bear market run. Yeah, making America bad and making the stock market bad because all the US businesses are going to find it very difficult to trade with tariffs. Yeah, their stock prices not going to hold up. So all businesses in the US potentially becoming overvalued because their profitability is dropping by a minimum of 10%. Your stock price is going to drop by a minimum of 10%. This market needs to drop by a minimum of 10%. And some, potentially. So, yeah. Key level where we are now. If we break this low, so yeah, this week we've got the gap to fill. If we come back down and we test last week's low, not today. I mean, it's going to take something pretty big today, like a Trump announcement. But if we did come back down early next week, test that low and fail it, that is your M pattern reversal multi-week. Off we go. So all the Bitcoiners are saying buy, buy, buy. All the economists that know what they're talking about and don't believe in Bitcoin are saying buy, buy, buy. We'll see. But market this morning, certainly not really showing signs of weakness at the minute, is it? Oh, you get. I am going to reduce risk, taking a partial on the NASDAQ. Don't like the price action here. I'm just going to protect the NASDAQ, break even. S&P, I'll let that run. And the Dow obviously is a long. So basically what I've done there is I've locked in profit, can't lose on the NASDAQ, and I've hedged the rest of the market. So whatever happens today, if the S&P drops hard, that'll drag the Dow down. The Dow will stop out. The S&P will hit target. If the Dow rallies hard, that will stop the S&P dropping and potentially push the S&P up to stop out, which means I make money on the Dow and the S&P stops out. So either way, whichever way this goes, one of these should make a profit. And obviously that's already banked. So I'm going to leave FTMO running. Oh. Is anybody trading FTMO? If you hit target, they don't automatically lock your account out, do they? And go, well done. They just let it carry on. There you go. That was target there. That is target. $3.5 grand. Job done. Passed. 3 days. There you go. Oh, I would have carried on. Look, never mind. There you go. FTMO done. Yeah, we'll see what happens. Goes on with the rest of that. What am I talking about? It's Friday. Where are you targeting? Well, what were you targeting on 20% of ADR range as a partial? What were you targeting on 20% ADR as a partial? So my targets are for a partial are 0.3. So my minimum range is 0.15. My stop loss is 0.15. So my partial is 2R. Yeah, 0.3. So 30% of ADR. So basically when it takes a trade, the partial is automatically placed at 30% of ADR, which is obviously a 2-to-1 risk reward ratio. But obviously I adjust that based on what I see on the chart. So for the S&P, obviously today, I've reduced that to 1342 to 1580. So that's 1.1-ish, because I think there's a chance that we might double bottom. And we're not even getting to a double bottom. We're putting a higher low in. Look. So this is either a flag break short, or rather that's the flag break short, or it's not. So I've adjusted it. And equally, if I look at where the TP is to the upside, so let's look at the Dow. So Dow's breaking long. So if I look at the TP to the upside, equally, depending on how obviously it's going, but there's no point in putting a TP there, is there? It's just literally in the middle of nowhere. That's the origin of the move. That was your last low, which they broke through with that propulsion move. So worst case scenario, if this breaks to the upside, it's either going to stop there and bounce where it did yesterday, which was that previous high, or if it breaks through there, it's going to blow straight through into the previous day's high, which is that propulsion gap. So that's your target to the upside. So there's absolutely no point in putting the target there. Either needs to be moved down to here or up in that propulsion gap. So I always adjust my target based on where price is going, not on a mathematical equation, because maths is great, like harmonics, Elliott wave. It's all measured movement, Fibonacci, measured movement. Everything in measured movement obviously works, but this is an obvious sell order to break that daily high. Yeah, so they broke that low. They sold the crap out of it to get through there, because everybody that was defending the buy there got stopped out, flipped short, stop and reverse orders triggered to drive through that high where there were buy orders. So they had to drive high volumes of sales through that buy order that was sitting there. There would have been limit orders sitting at yesterday's high because it was a breakout. So that large propulsion gap is now full of sell orders, because everybody that stopped out there, stop and reversed, flipped short. So this is full of sellers. So we're either going to hit resistance there or there. There's no point in putting a target there, is there? It may well, I mean, there obviously is a point. If you want the money, take the money, yeah? But logically, one of those two should happen. Which is why, you know, I don't set and forget. I look for where price is going to be headed. Just had a gap up on the Dow. Really hard to decide which way this is going. One of these is going to win. I hate being hedged, because one of those is going to win. You've got a 50-50 shot of shutting one out. And this one I can shut out right now in a profit and not take a loss on it. I can shut that out in a profit and not take a loss on it. But which one do I shut? Which way is it going? Okay, taking a small loss on the S&P. I'm going to assume the Dow's going to break. Dow's just coming up into Globex high. That's your high of the session, high of the pre-market. If it breaks that, we're off. If it doesn't break that, I've shut the wrong one. I'm just going to cancel these pending orders on the FTMO account as well. Holy crap, I've gone was lucky. Spotted that. Yeah. Okay, so we're just going to cancel these. Make sure I've got no orders running. Got it. Orders all over the place, look. So S&P might let that trigger along. I'll see how far the Dow gets. So basically, if this Dow can't get through the Globex highs, which it's struggling at the moment. Yeah, so we hit that area, sold it, sold it, sold it, sold it on the news. This is the first attempt to get through Globex highs, make a new high of the day. If the sellers are sitting there and there's iceberg orders sitting there, the buyers are just going to bat it until they run out of buy orders, and then the sellers are just going to run them over. And we've got a gap. Tiny, but there's a bit of strength coming through in the US at the minute. Might get through here. Well, that's not the Globex high, sorry. Line's in the wrong place. That's the Globex high. Afternoon, Elevated. How's Starmer doing? I don't know. Seems fine to me. I don't know him personally, but I was on the news last night and he looked all right. When I manually take a partial, the ORBEA will still take another partial one? No. Well, no, because you use the... If you partially close it yourself, then yes, it will take another partial, I guess. I don't know. I've never tried. I move the line. I let the EA do the partial take for me. We're rejecting highs. Got a NASDAQ short on as well now. What a mess today is. Oh, sorry, that's a break even, isn't it? Yeah, that's okay. That's okay. That's covered. Have not upgraded to the new ORB yet. As I understand, I can manually set the times. Yeah. You can't set the time for a partial close. No. You can't set times to partially close. You can set times to close all orders. So there's a session end. All orders will be closed and all pendings cancelled at that time. But there's no news today. So there's nothing to worry about today because there is no news today. But if there was news, then yes, you could use that, but it would just shut everything. It won't, and it will cancel all pendings. I wouldn't do that though, because what you need news to make money. You're assuming that the news is going to negatively. This is the problem everybody has. Everybody assumes the news is bad. Don't hold trades through the news. Why? It's when the market moves. If you're in the right direction, milk it. I've never understood people's... I was taught that to focus on fundamentals, focus on the news, because this is what moves the market. When this lights up red, yeah, the market moves. When there are scheduled events that come out in a deviation to forecast, the market moves. Yeah. What do you need as a trader when you enter a trade? The market to move. Why would you not leverage the one thing that moves the market? And I get it with prop, because what prop don't want is the lucky trades. Do you think trading is not made up of luck? Yeah. I was short when Trump did the tariffs. Made a lot of money. Was it luck? Yeah. Am I complaining? No. Half the trades that I make profit on are luck because I only have a flip of a coin and I apply risk to that flip. If luck is on my side, I take it. So I don't shut your trades and your pending orders. Let's say, for example, right now, a news event comes out. Trump says something which collapses the market. He puts 185% tariffs on China again or something stupid, yeah? What's going to happen is right now, this is going to fly down here. It's going to stop me out. It's going to trigger my pending short and go 10R. 10R. Why would I not want 10R? Nuts. Fundamentals are your friend. I'm going to cancel off the S&P. I don't want to take another risk high. We have just broken out, but obviously this is the first attempt. It might not make it. So I'm not going to, let me just check the Nasdaq. I'm going to cancel these. I don't want to go long as well. Just because if it wasn't a profitable day, I would probably leave those on and see if I could leverage extra trades. But I'm not jeopardizing the profit for it. So I've literally got one trade on at the moment, which is trying to break out. So the worst case scenario I've got is taking a $400 loss, which puts me into $600 day. So the worst thing that can happen today is $600. Best thing that can happen today is $2,000. So, or more if Trump suddenly goes, do you know what, world? I'm going to give negative 10% tariffs to all countries because I love you all and I want to be friends and I want to trade with you. Stock markets are going to go through the roof. So the upside is actually not $2,000, is it? The upside is 1 ADR, which is all the way up here. 2,600 pound. Sorry, this is a pound account, not a dollar account. Oh, I've done this. Yeah. Need to change that to pound, don't I? I completely forgot I put that input. I completely forgot I could do that. I'll do it on the other ones at another point. Come out of Nasdaq, went above the partial close line within a second. Yep. If you take a partial, EA will take another. Yeah, as Paul's just confirmed. So yeah, I think I've never tried it because all what I do is I use this line. So I will move this down. If I want to take a partial right now, there's 34 seconds left. I'll do that. The EA will take the partial for me. I don't do anything manually. Yeah. But if you were to use the Trade Manager dashboard and take a 0.25% partial or a quarter partial or a half partial, when it gets to that line, it will take a 75 or whatever input you've put in to that level. It will take whatever that is. It will close that percentage of your open lot size. So if you shut half of it now and let it get to the line, it should shut 75%. I can't remember the exact code, whether I used initial lot size or whether I used open lot size. If it's open lot size, which is probably what I would have done, then it will just close out that. So, David, good afternoon. Enjoy my weekend. I certainly will now you've turned up. Thank you very much for that. $10. And David, we've got a new game going, look, right? It's this community thing. And the more you talk, the higher up you get in the community rankings. You get XP and it resets every stream. So if you go really big one stream and you talk lots, you get really high rankings. And then the next stream you start at 0 again. So you have to talk again. It's really good. But I really wanted to see what happened when somebody tipped because I've never had a tip while this thing's been going because it only started kicking in today. So you've just super chatted $10 and you're not in the top 3, which is disappointing. I want you to be at number 1 now. But it doesn't seem to work that way. Never mind. Anyway, I have passed my FTMO evaluation. There you go. Nice and easy today. That's all good. Thank you very much for that, David. I will have a lovely weekend now because I have a pint I can use. Did not know I could move the line. You know what I'm going to say? You know I'm a fan. Yes, I know you're a fan, David. I was hoping you would instantly get the crown, but it doesn't work that way, which is really silly, isn't it? Why is my website so slow? There's a 25% sale on at the moment, by the way. I didn't announce it. I just did it. So down here, this video is an hour long, right? So what I've done is I've cut that video into all of these videos, which is the same video, but shut into little pieces. So you can go to the actual part you want to know about. So partial profit taking is only 3 minutes long. And there I will explain. There you go. So now you know. Probably only with the new version. Well, with this, if any version of ORB version 3, the line's always been movable. If you're on version 2, no, because it didn't have partials like that, did it? Just broken long. So if you had not shut those pendings, you are now triggered also long on the S&P. The reason I didn't want that is because by the time that order is triggered, we've done 15 minutes of buying, meaning that there's a probability we'll probably pull back a little bit before we put a new leg in potentially. So I didn't want to trigger. Buying after a big move up is not necessarily a good idea because of the pullback. So I didn't want to get stopped out and then go. That's the only reason I've cancelled those pendings off. If you look at this one, you know, we're going to have a good 20-minute rally. Then I'm going to buy it after a 20-minute rally, which doesn't make sense. So it may well work. It may well fly. And it was the wrong thing to do. But either way, I've got the Dow running. So, and I'm just going to reduce risk on the Dow. Just going to pull it up so that that's my risk. No point in taking a big risk on this as we've broken out now above those highs. So if we are going to break out and fail, obviously 80% of breakouts tend to fail. So this is a breakout. If it fails, obviously I'm just going to take a couple $100 on it, but hopefully that propulsion gap will hold up if it does pull back. Or that Globex high. As you can see, we've already tested it. So we broke out. We've tested the Globex high. And they've rebought the Globex high. So hopefully we've got enough balls up here to hold the market into a flag. And then they'll just propel out of the back of that. We will see. Question. On the forex pairs, H1 RSI strategy, what's the distance you're using on additional entries? 3/4. So at the moment, I'm using 3/4. I always have used 3/4 of an ADR. I have used half an ADR in the past. Right now, with the markets, with the volatility we've got, it's 3/4 of an ADR between trades. The distance between entries is what creates the higher drawdown. It creates higher profit as well because you've got more entries closer together. So when the market pops in your direction, you get a lot more volume. You get a lot more volume of lots and a lot more money. However, if the market squeezes against you, you're going to have twice as many positions on, which means you've got twice the drawdown. So spacing further apart is going to reduce drawdown overall over time. So 3/4 of an ADR is, in all testing I've ever done in position trading with either the market reversal alerts EA or with a position trader EA, all the system parameter permutation testing around distance spacing, 3/4 of an ADR has always come out as the best from a profitability and from a drawdown perspective. Because if you leave it 1 ADR between trades, your average price gets a lot further away a lot quicker, meaning it's harder to get out of your trade. If you space it too close together, half an ADR apart, you're going to get potentially too many trades on. So we'd have 5 trades on by the time we get there, meaning that your average will be a lot closer, but you'll be in a lot more drawdown. 3/4 of an ADR means you're going to have nice spacing, less positions, less drawdown, but your average will be kind of the middle ground. Won't be too far away, but it won't be really tight either. But what that allows you to do is when you get to a point Where are we? It's 1, 2, 3. 1, 2, 3. Yeah. So when you get to a point where, in this case, if you were shorting this, you had 4 positions on here, you can take an aggressive drawdown control position of up to 75% of your total lot size to bring that average, which would be here, which in this case would be somewhere around about 2 ADR away. If you put an aggressive drawdown control position on there, your average is going to jump up. So even if you just got a flag break, you get an exit. So 3/4 on ADR is nice because it's not too aggressive, it's not too loose, but it also helps you benefit from aggressive drawdown control better. You can use aggressive drawdown control more effectively by spacing that distance. But there's no right or wrong, so if you use a position trader EA, or even if you haven't got it, download it and put it in the strategy tester and run a test, run an optimization test using half ADR, 3/4 ADR, 1 ADR, 1 1/4 ADR, and 1/4 of an ADR if you want to. Just run a system parameter permutation test on that one input, and you'll see the difference in drawdown and you'll see the difference in profitability, because you can export the results, don't forget. So if you export a daily summary, what that will do is on export at midnight every night into a CSV file, the actual drawdown. So the trouble with the strategy tester is you can't see drawdown, open drawdown in the results. So what that export does is every day it exports your open drawdown. So you can see in that column what the maximum open drawdown at any point was on all positions. It's a good test to do because it gives you the confidence. When you're in positions like I am at the moment on the pound US, where I've got 4 and I had 5 on, took that one off, took the profit on that one. But, when you're spaced nicely, you can see, and that was my 5th position there. My average is currently here. My average, I think, was there when I had the other position on. So it's only 1 1/4 ADR away. It's not far away. I'm only in 1% of drawdown on the trade. So it's not a problem. So if it goes to 7 or 8 because it's being squeezed, I'm only going to be up around about 3 or 4% drawdown. Actually, probably more than that. More like about 5 or 6%. But if I'd taken this same trade here with half an ADR spacing, I could potentially be in there, probably there and there. So I'd be in 1, 2, 3, 4, 5, 6, 7 trades. And obviously, maybe I would have closed that one off. So I'd be in 6 trades instead of 4. That's 50% more drawdown. So let's say, for example, it goes to 8. Instead of being in 5 to 6% of drawdown, I'd be in potentially 10, maybe more. Just don't forget, if you're using lot incrementation as well, the lot size is getting larger. So as you get into more, your drawdown exponentially increases as well, which is why it's important to keep size small, spacing wide, and just let the market breathe, because the market will pull back. You've just got to keep this average close enough to get out. Inside bar on the Dow. Indecision, market stalling, inside bar on the S&P, and I presume inside bar on the NASDAQ. Yeah. So market stalling. Would you say trading is basically a strategy competition game? Almost like poker? Not really. Trading, to me, anyway, is about maths. It's about statistics. Because this, you got to understand that everybody overcomplicates trading. Everybody's trying to find the perfect strategy, which is never going to exist. Everybody's trying to find a better strike rate because they know the maths. It's not hard to work out the maths, is it? So if you have a 50% strike rate and you have a 2-to-1 risk-reward ratio, you will make a fortune. So everybody's striving to do that. Yeah. So when they see they've got anything like a 45% strike rate, they're always trying to get to this magic number or above. Yeah. Because you know the maths. The maths is easy to work out. Yeah. So every time you lose one and you make two, you plus one. So if 50% of your trades are plus two and 50% of your trades are minus one, you've got a net positive result. Maths, simple. The difficult part is finding the strategy. But the other thing people miss is that it's binary market. It only goes up and down. So if you apply risk reward to a binary random market, you will make money. So it doesn't really matter what you do. So in that respect, it's not like poker, because poker has infinite combinations of hands and infinite players. We have one player, the market, who has one hand or another hand, red or black. Our job is to analyze that one player and decide whether he has a royal flush or an ace. So either we're going to get beaten or we're going to beat him. That's all there is. So as long as you understand that is how this works and there is no other way it can work, everyone's like trying to complicate it, like we were talking about earlier with harmonics. So yeah, when you see a pattern that looks kind of like that, yeah, it means that the market has pushed up, pulled back. We've got a double top going in, and then we've got this, that, and the other. So from a double top, the projected should be X, Y, Z, blah, 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 ABC, mathematical equation with 15 characters in it. It's a double top. It's where the sellers are. Yeah. Why overcomplicate it? When you get to the double top right now on this chart, one or two things is going to happen. There will be more sellers at that point, which there was last time we got there, or there won't. So if you believe there are more sellers here than buyers, you sell it. You place a stop there and you put a 2R on it and try and get that right 50% of the time. That's it. Nothing else you can do. Yeah. You could overcomplicate it by saying this needs to be within 10% of the previous high, or needs to have wicked through indicating a stop run has happened, or it has to hit it to the pip with a 1 or 2 pip variance, or the candle has to have a wick on it of 50% and it has to be a bear candle, or the previous candle has to have been a bull candle and this one has to be a bear candle, or, see what I mean? Who cares? Either they're there or they're not. That's it. Binary. Yeah. Right now, there are tens of thousands of orders buying it. There are tens of thousands of orders selling it. If there's 100 million selling it and 50 million buying it, this goes down. Because when this 100 million has eaten that 50 million, it will tick. If there's 25 million here, that 50 million left will tick. If there's 20 million here, that 25 million will tick. Now there's 25 million sitting here and there's only 5 million left that way. So it will tick up. That's how the market works. Nothing else is at play here. It is volume of buyer and seller orders from institutional algorithmic movement. That is the lot. There is no special magic formula at any price point in time that will make you more profitable than not profitable. Yes, it's more advisable to sell at highs and buy at lows than it is to sell at lows and buy at highs. That's been going around as a saying in pretty much every film you've ever watched. Sell high, buy low. Yeah. When the market's moving down, buy it. When the market's moving up, sell it. Why? Because all it does is go up and down. So if it's gone up, what's the logical thing it's going to do next? Not rocket science, is it? But we try and overcomplicate it by, well, I know why it's overcomplicated, because you can't sell a course on simplicity, can you? So we overcomplicate it with people like ICT saying, when this happens, do this, that, and the other. And here's my 12 different ways the market can move. Wrong, only moves up and down, mate. Sorry. But there's another 12 ways we can apply a binary buy or sell to the market. Yes, we could just flip a coin, though. Same thing. Yeah. Poker has many variables. Blackjack has many variables. Roulette, craps, many variables. Binary markets, up and down. When you're doing this, it's exactly the same as walking into a casino and placing all your chips on black or red. The difference is the casino will only ever give you a 1-to-1. Yeah, you put down 1,000, they'll give you 2,000. You get your original stake back plus $1,000. When I put 1,000 down here, this thing could move 5R. So I get 5,000 back and my initial $1,000. I've made 6. I've got 6. That's the variance that we have in trading. This is why people focus on risk reward, because the maths is simple. Make more than you lose. What you don't get is the binary market doesn't allow it to work in a 50-50 ratio like that. You've got to have something that gives you an edge, which is what the casino has. Someone that's really good at reading people in poker has an edge. Someone that counts cards in blackjack has an edge. It's a mathematical edge. Very similar to this. But when this thing here is sitting like this, one of two things is going to happen with guaranteed accuracy. It will either break that low or it will break that high. And if it doesn't, it will bounce at that high or that low. Your decision is when you get there to either buy it or to sell it. Binary. All it does, and this is all the strategy, all the ORB strategy does, and all position trading does. My strategies are very simple. When the market opens, we wait for the initial flurry to go in, and then we let it calm down, and we say, right, there's your initial flurry. It's either going to go long or short today. Yeah, occasionally it won't. So when it does that, we lose. Otherwise, we win. Position trading. I buy it after it's come down, and either it goes up and I win, or it goes down and I adjust my price to a new level by placing another order and wait for it to go up. And then it will either go up and I'll take it off, or it will go down and I'll place another order, move my price to a different level, it's more favorable, and I'll wait for it to go up. And I'll repeat that process until the market exhausts itself, because everybody that was selling, now there is $0 left down here for them to sell to, which means that we can only do that because there are only two forces at play. And at some point, one of those forces will be exhausted. Your job as a trader, everybody teaches you, is to identify when that is going to happen. You can't, because unless you know the monetary amount sitting there and the monetary amount sitting there, there is no way you can know. Unless you have a tap into every central bank and every institution that is trading right now, and you can see exactly the weight of volume, like people teach you in the ladder, which is all spoofed, so you can't use it. But unless you know that as a fact, and even the banks don't know because they don't know what the rest are doing, you cannot predict the future. So all you have is a coin flip. It'll buy it. You sell it right now. So right now, this is saying sell. It's screaming sell. This is where we sold it from. We've pushed up. They sold it back. We've pushed up. They've sold it back. We've pushed up. They are selling it back. If in 13 seconds, this candle closes below that line, the sellers are in control. I would sell it. Stop loss. Target. Anywhere you want to target down there is going to make you way more than that. Even now, you could press the sell button now and go above that high. You've only got to move that far to get a 2R. Easy. But you're not in control of what it does, are you? It does what it does. Your job is to get on the train and either get to that station or that station. You can't control it. So stop trying. Just press the button and wait. It'll either work or it won't. Obviously, if you place your stop loss way too close all the time, you will get stopped out way more than 50%, in which case you will fail. So develop something that you see happening over and over again. I see every day at 2:30, the market open and break out either long or short. So that's what I do. And that's what pretty much most traders in stock indices are doing. They are taking some kind of break or break pullback play, because that's all the market does. It's either breaking out or it's broken out. So you either take that or you take that. You're either right or you're wrong. That's all there is. But what you do is you apply risk to the expected movement. If it hits that high and you buy it there with a stop loss of half of that distance, you cannot fail to make a 2-to-1 risk reward ratio. If you can do that 50% of the time, you're profitable. What you can't do, though, is control your emotion. And this is where everybody screws up, because they can't do it. They get stopped out 3 times in a row. They hit the table, double their risk, press the button again and blow their account. Nothing to do with maths, strategy, or statistics. It's this. That's what people can't control. When you build automation in and use EAs, you don't have it. It's gone. I didn't place any orders today. I haven't placed any orders this week. The EA has placed all the orders. All I've done is sit there and watch what happens. And either it stops me out and I take it, or it doesn't. And I make a decision based on what the volume is doing. If it's rallying like a crazy thing, I'm not going to take the profit immediately. Or I might do, depends how my week's gone. If I'm having a crap week, I might take that profit just to get myself back to a break-even stage. If it's flowing, I'm not going to take the money. I'll keep the money where it is on the table with a possibility to grow way bigger. Protect it. Yeah. Worst case scenario is $1,000. I'm sitting on 1,500. I could have 3.5. The fact that I'm up, whatever I'm up, 9 means I'm going to let it run because I don't need it. And this is where you make the most of your money. There's a I can't remember what he said, but one of my mentors, Kanal, used to say to me, I can't remember what the saying was he used to say. But it's a lot, it's the old cut your losers short, let your winners ride, basically. But his was when you're winning, win big. Yeah. When you're losing, lose small. I think that's what he said. I can't remember the exact wording. But what he was basically saying is if you're on a roll and you're in the zone, like Mark Douglas, trading in the zone. Yeah. If you're in the zone, stay in the zone and keep doing what you're doing in the zone. When you're not in the zone, cut it all and take time out. He used to have a rule where if we'd taken three losers in a session, we stopped. If you took more than 3 losers in a session, fail. Go back to day one. Basically, you've screwed it. You haven't learnt because, it's the whole definition of insanity is doing the same thing over and over and again, not learning from it. If you lose 5 times in a row, you're losing, you're doing it wrong most of the time. Yeah. If you stop out, and this is why this EA has a limit on it, it will take a 5-minute break, a 10-minute break, a 15-minute break, and a 30-minute break. If it hasn't made money, it stops because it's wrong. Today is not the day to do breakouts. Stop. Yeah. So, he used to say, if you're running and you're winning and you're green, stay green. If it's going green, it's because what you're doing is fitting the market regime we're in at the moment. If the market is breaking out and running, you're going to make money if you're breakout trading. If it breaks out, let it go, right? If you're mean reverting and all you're doing is losing all the time, stop mean reverting. Flip the switch, go long, yeah? Go with the market. He used to trade with us mainly on NVIDIA and major stocks, basically, large cap stocks. Because they had that volume, they had those breakouts, basically. And all it was every time there was a winner announced, it was like, how many contracts did you have on it? The person that made that whacking great amount of money that you went, wow, he just made that much? Do you know what? He had 5 contracts on. Not 1, 5, because he saw it work and he added to it. Because he was winning. And that's where you push it. Everybody else seems to want to get in. And when it's going the wrong way, they will wait for it to pull back and then maybe add some more. It's like, well, no, not on stock indices and fast moving markets like 5-minute timeframes. All you're doing is you're doubling your risk and doubling your losses all the time. But when something's pushing like this, like the Dow right now, the logical thing to do on this Dow Jones trade now is to place another pending order here. Yeah, because if this sits here like this, or the other thing you can do is there's your entry price. Press the buy button now and move your entry price up to here and then protect it with a stop. Now, if this does flag and go, you've got double the amount on. I can't lose. Why not go for it? Yeah, this is the equivalent of sitting there in blackjack, having sat at the casino table for 2 hours, losing all your money, getting more and more drunk on the free alcohol they're giving you and going, screw it. Stick the whole lot down. Why not? I'm already up $1,000. Why not stick another one on? I'm not going to because I don't want to upset the EA. But that's what you would do. But you do it because this thing is telling you you're in a winning mindset. the adjustment. Afternoon, Pot DJ. How are we doing? So it's a coin flip with math management. Yeah. Exactly. It's statistics. It's statistical analysis. Yeah. I've run statistics. You know, if you're in the member stream, I don't think you'll remember, Robert, but if you go in the member stream, the members group on YouTube, all the membership videos in here, the bulk of the education starting back here is strategy development, reading price action, understanding how and why everything moves, statistical analysis. Yeah, there's nothing in here about strategy. It's irrelevant. Yeah, if you understand how to backtest, you understand the mathematics, you understand portfolio analysis, how markets move, why markets move, you don't need a strategy because you know how to make money. You know how to extract money out of market movement. You cannot predict the future, but you can predict historical movement happening again. So everything I do is based around what's happened in the past repeating itself. It will only repeat itself when the market conditions are right. So you have different strategies for different market conditions and you adjust your risk accordingly. But you can't just get one strategy, apply it to a market and expect it to continuously make money. Prop know this. This is why they teach you strategies. Whose website was I on the other day? FTMO's. In here. Where was it? I can't remember where it is, but there's an area in here. And what this does is it gives you pages and pages and pages of strategies. Literally pages of them. And all of those strategies have got something in common. They are well tried and tested strategies. So what they're doing is they're giving you a playbook of everything that works sometimes. And what will happen is sometimes it will work, but sometimes it won't, because every single strategy is, because I went through quite a lot of them, and every single strategy is a single type of strategy. It is either a breakout strategy, a mean reversion strategy, or a trend following strategy. So when the market regime is indecision, every trend trading strategy will fail. Every breakout strategy will fail. Every mean reversion strategy will make a fortune. So from FTMO's perspective, they have a massive amount of traders trading mean reversion because they taught them that. They will all pass evaluations and get funded. Then the market regime will change to volatile. Yeah. All the breakout traders will make a fortune. All the mean reversion traders will fail. All the trend traders will fail. But the breakout traders will work. They will pass. They will come funded traders. But these guys will lose their accounts, go back to day one. Then they may change their strategy and become a breakout trader because they've seen the breakouts working. But at that point, the market goes back into indecision and all the mean reversion traders start making money. But the people that change from mean reversion into breakout suddenly start losing money. Trend traders, poor guys, they've been sitting there for a week now, not making a penny because it hasn't gone into a trend. But then the market starts to trend. And all the trend traders make a load of money. The mean reversion traders can't because it never mean reverts. The breakout traders can't because it doesn't break out properly. It accumulates and then it goes. So they teach you all of this, full well knowing that none of it's going to work continuously. And they set the criteria up to make sure that all strategy regimes will last long enough for some people to pass, but then change. And the 3.5 grand drawdown or whatever it was will always stop you out, will always blow your account. It's all maths and statistics. What these guys in all these prop firms have done is taken the maths and statistics to make money, flipped them on their head, and not focusing on the upside, they're focusing on the downside. What is the average drawdown? Brilliant. Now let's make it slightly smaller. So it looks really good until it's not. This is what it does all the time. That's what they're doing. It's amazing. It's the inverse to what we do as traders. It's the inverse to developing a robust strategy that works over a long period of time. This has drawdown periods. It's had weeks where it doesn't make money. But it has lots of weeks where it, and look at the, and this is the differential. Look at the difference there and there. There's a grand loss. There's a grand loss. There's a 2.5 grand, a 5, and a 3 at 8. What's the continuous factor? Risk reward. But I'm not doing risk reward per trade. I'm doing risk reward per week. I'm looking to make money, extract money when the market gives me money. When the market doesn't give me money, we reduce our risk and wait for the market to go. If I have 2 or 3 losing weeks in a row, that week I will let everything run as much as possible, because my job is not to make money, it's to recover loss. When the market is favorable for a breakout strategy, I will use that to my advantage, and I will set my targets further, knowing that we've been in accumulation, which is an area of dull volume. And when it picks up, we will stay in high volume for a period of time. That you have to use to your advantage. This is what EA trading or automated trading does. It just plays out the edge. It stops you interfering with the edge, unless you want to, which in my case, I do regularly. Like this, you know, right now you should take this. Yeah, got 2 minutes left on this candle. Yeah, it's going to engulf basically the last 30 minutes worth of price action. It's a big sell order coming in on a failed breakout on a Friday. Take it. I only know that from experience, but it may not. It may sit there and it may absolutely fly. But for me right now, in my personal situation, that's better than that. So that should be closed. In your situation, it's going to be different. You'll make a different decision. You've got to trade and do this. There's no course that can tell you anything. Doing is the only thing that can hammer home what happens. So you show yourself historically in the back tester that the same thing happens over and over again. You make sure you've got the statistics there. You make sure you've got the risk reward there. Everything adds up mathematically. And then you just let an EA execute it for you so that you don't get involved, because you're the thing that screws it up. Always. Would you say Al Brooks, who purely reads price action, is a sham? No, he's a brilliant trader. He's just doing exactly what I just said. Yeah, Al Brooks waits for the market to move above a high. Al Brooks was shorting right now. Yeah, that is Al Brooks' strategy. Price action. He uses a strategy called PASR, price action, support and resistance. It's one of the strategies I learned. One of my mentors I was talking about earlier, his strategy was PASR. And that is exactly what Al Brooks and people that read price action do. But the bit that everyone focuses on with Al Brooks is price action, candlestick pattern recognition. It's not the candlestick recognition you should be focusing on. It's where it's happening. This is the important thing. Price action is happening at resistance. What I just said earlier, iceberg orders, volume, buyers and sellers. If they sold that level, we can just use today's level. Look, if they sold this level over and over and over again, the next time we get back to that level, if it manages to peek through and can't get through, that is price action. Yeah, if you see a candlestick that looks like that, this is what everyone focuses on. We've got a big bull candle. We've got a big tail and rejection. That happened because of this, not for any other reason. You can find big tails everywhere. Yeah, there's a big tail there. There's a big tail there. There's a big tail there. They mean absolutely nothing, because there is, oh, actually they do in this case. But the reason those big tails are there is because you're trying to get through a level which previously was a big price trading point. Because there was a lot of volume there, there are a lot of initial orders executed there. My order is executed here. Yeah, so I took a breakout of here. A lot of other people took a breakout from here. This is what a propulsion gap is. When we get back to this area, the buyers here that made that break are going to want to add more size if they are still long. I am long, therefore I would like to add more size here to try and keep it long. I haven't got the volume. Banks have, so that's what they do. But everybody that was short here has now flipped. So what Al Brooks does is he waits for them to get through there. And like I said earlier, 80% of breakouts fail because the volume of orders it takes to get through here, through these thousands and thousands of orders selling it, means that you are running out of buy orders. So when you pop through, it's like a stalling plane running out of oxygen because it's gone too high. You haven't got anybody else there. So you have to come back down the other way. And then once you've come back down, you can find more orders that are willing to jump on the wagon with you and buy up that level. So he's not a sham in any way, shape or form. He's an incredibly intelligent guy, knows exactly what he's doing. But what he's doing is reading price action. He's reading what the market does. He's learnt, like I have, what drives the market. So you can see where the orders are. Sellers are there. Yeah. It's bloody obvious. Yeah, there's 4 times we hit that level and we sold it. What do you think is going to happen when we get back there? We're going to find some resistance. But at this point in time, when we got back there were more buyers than sellers. There was 100 million here. There was 50 million there. So we broke it. Just simple. It's binary. Only do that or the other. But you have to break it down into a strategy, don't you? So, you'll find a lot of people that do well in prop. They are blowing accounts all the time. But when they don't blow accounts, they are executing a strategy that is long-term profitable, like ORB. So all you're doing is you are buying and selling only from levels. So you only sell it here, right? If this thing breaks out above here now, you don't touch it. If it does this for the rest of the day, you do something else. If it gets here, you sell it once, you place a stop, and you wait for that to happen. And you let it play. Yeah. Or if you are an Al Brookser and it breaks this high, yeah, and it trades up above here, you sell it. And you have a set stop loss of a percentage of ADR or a percentage of ATR, and you have a reward ratio, which would be obvious to set in the previous place that we broke out from, because that's where the next batch of buyers are. So if you're selling here and you want to get out, you need someone to buy your trade back from you. That's where the buyers are. So the price moves down to where the buyers are, and everybody that sold it gives their trade to the buyer. The buyer pushes the price back up again. And then when he gets to a level where the previous sellers were, he gets there and he sells the order, and it just market structure happens. That's a market. I've used the analogy of walking into a fruit market before, using apples and oranges and bananas, whatever you want to. There's a guy there selling apples for £1. There's a guy there selling apples for 80p. Everybody's going to queue up at this guy's stall until he's got no apples left. When he's got no apples left, you're going to go and buy one for £1. So what happens is you move to the next stall. Every single price point on here is selling at different prices. I want to buy it here. If they're all gone, I'll buy it here. If they're all gone, I'll buy it here. If this guy here has got 1 million apples and this guy here's got 50 apples, we're not going to get to this guy because there's 1 million apples there, and everybody who wants to buy apples is going to buy them. He's going to have 800,000 left, and it's never going to get above that price. Resistance. Iceberg orders. Large institutional blocks of orders which just get replenished every time they are exhausted to not let price through. That's how it works. Unfortunately, you can't see it. So what the best thing to do is wait until you get back to that level and take a shot. It either will or it won't. So you wrap risk and reward around that idea. But your idea has no hope of working any more than any other idea on the planet. Because if you learn a strategy of which there are tens of thousands out there, they all have a binary outcome. Al Brooks is exactly the same. He just identified that the thing that clicked with him was when it goes above a level, I sell it, rather than when it gets to a level. Some people will buy it before it gets to the level in the assumption that you won't get there because the selling pressure will drive it away before you even get to the price. And that also happens. But there's no right or wrong, is there? Look, if you were waiting to get to there to buy it today, you didn't, you got to there. Some people will bought it there. Why? Because this is where the large batch of orders was. They bought it again. Yeah, but some people use that strategy. Some people were waiting for that. They didn't trigger. They did. Still binary, wasn't it? Still went up or down. God, it's a deep one today, isn't it? You've sent me on a mission. It's because everyone's trying to get their crowns, of which Robert is sitting in number 2 spot at the moment. Do you know what this does for me? It makes me more attracted to your questions when I see the crowns. Good, isn't it? Good day, gold. I haven't looked at gold. Don't look at gold. Me and gold don't get on. CAD Swiss has hit ADR. Gold. Not much, though, is it? Really all you've done today. There's a good example. Look. Breakout. Propulsion. Buy into a sell. Sell. There were more sellers in that point than there were buyers. The other alternative would have been that there were more buyers here than sellers, and the candle would have done that. One of those two things had to happen. These sellers were either going to overpower these buyers, or these buyers were going to overpower those sellers. Binary. You just have to pick a side. Bulls and bears. That's it. You are either a bull today or a bear today. And if the bears keep winning and you're a bull, you become a bear. That's as simple as that, isn't it? Flipping the switch long or short, depending on where the market's going. The ORB strategy, if it breaks short and it doesn't work out, we go long. If it goes long and doesn't work out, we go short. If we go short and doesn't work out, we stop. Because the market's not moving. We're breakout traders. Euro CAD, ADR, there's loads of ADRs going off. Yen's collapsing. Trump's just said something. Someone's just said something. They're selling the yen. Not that, is it? Half an hour ago. Michigan. Really? Wasn't Michigan either. I don't know what that was, but something's just spiked the market. Big sell order gone in the yen. Right, I'm going to leave it there today. I've waffled on enough today. Good session though. Forex, can't do anything with it at the minute. I can't get anything back into profit. We're still sort of wishy-washy around a bit at the minute. So Euro CAD's the only thing I've got in profit at the moment, but that's ADR, so I'm not expecting that to drop anymore. I'm not going to take a partial because there's only $50 on it. So I will hold that into next week and hope that we get pushed down. Everything else is just sitting around waiting. So we are just stuck, especially Euro, Pound and Pound US. They are not moving. Swiss yen weekly range just achieved. Pushing up again at Euro Pound, hopefully. So there you go. This propulsion gap holding today. Yeah, that's the initial buy order. The actual buy lasted for 3 hours up into there. So we're buying back into that propulsion. US dollar CAD, ADR. It's all moving now. Sure, something hasn't it? Something's going on. There's some US dollars coming down hard. Look, or the Canadian dollar is rallying. Let's have a look. Very difficult to tell. This looks like a bit of a safe haven run to me. The Swiss franc is powering up, and the yen is powering up. So it could well be just exiting positions for the weekend and sticking them into the safe havens in case. Be careful if you're trying to mean revert these. It might not happen today. Yeah, Swiss, they're really buying a Swiss look. This is a safe haven move of some description. So they're just basically buying a bit of Swiss for the weekend where you keep your money, like putting it in the bank. Out of the Dow, closing the opposite order. So yeah, just up £1,000 today. Leave it there. I'll be back on Monday. We'll have a look at what's going on. Just to quickly look at the weekend and Monday, just to see nothing happening. PMI week next week. So PMI is out next week. It's non-farm payroll as well. It's beginning of the month, isn't it? Yeah. So that's the end of May. May's done. So yeah, into June, halfway through the year now. So yeah, non-farm payroll next week, first week of the month. Should be a good one. Trump said that China violated the trade agreements. Yeah, that was much earlier. Yeah, we covered that at the beginning of the stream. Yeah, that's not this. This has literally just happened in the last. It took off half an hour ago, but it's accelerating. Something has either something has spooked the market, which we haven't heard about yet, or this is just them executing the weekend orders to go to the pub. Yeah, and they're just getting flat for the weekend, basically. Oh, also, it's end of month, isn't it? Where are we? January, February, March, April, May, June. So yeah, it's end of month. It's not end of quarter. So this is probably just balancing the books end of month targets. So they'll just be flattening orders, really, just getting themselves prepared for reporting to the boss. And commissions. Don't forget, you cannot buy a new Ferrari if you haven't hit your target. And it's the end of the month. So if you need to hit your target to buy your new Ferrari, you have to get yourself over the line and get a load of P&L on. So manipulate the market, drive a load of orders in, get the P&Ls up, go to the pub. I know that for a fact because I know someone that used to work in a bank and they do that. They actually do it. If you go out in Canary Wharf in London on a Friday, end of month, literally 2:00 in the afternoon, full of bankers. Yeah, banks are still open. Should be at work. Full of bankers. Because they're out basically celebrating their commission checks. And it still happens. Anyway, so we'll see what happens Monday. But Monday will be this. I don't think shouldn't read too much into this. Crude won't affect the yen. So, but obviously Trump's cross, so it could say something over the weekend. Right, I'll let it go. Anything else you need, let me know. Otherwise, I will be back on Monday and have a good weekend. I'll see you next week.